Today we're going to look at problem 1-1B. Amy Austin established an insurance agency on March 1st of the current year and completed the following transactions during March. And then it gives us a list of transactions. Our instructions: indicate the effect of each transaction on the balances after each transaction using the following tabular headings. And it gives us an example. If we look at our worksheet is already set up for us with the exception that we have to fill in the owner's name right here. And her name was Amy Austin. We need to fill it in here as well. Okay. Now the first one says, opened a business bank account with a deposit of $50,000 from personal funds. Opened a business bank account with a deposit of $50,000 from personal funds. So we're going to come down here to our worksheet to letter A. She deposited $50,000. That's going to affect our cash. In a positive way, we're getting cash. So we add $50,000 into the cash account. We talked about in the PowerPoint that whatever affects one side of our equation needs to either do something to the other side or it needs to be subtracted and added to the same side. She's investing money into her business, so not only are we going to get cash, she's also going to gain some capital. Okay? So we have to record this $50,000 investment in the capital section as well. Okay, letter B. She purchased supplies on account for $4,000. So we purchased supplies, so we know that it's going to affect our supplies. We're getting supplies, so we're going to add $4,000 to supplies. Now it says purchase supplies on account. Whenever you see those words on account, that has nothing to do with cash. Okay? On account is going to affect our accounts payable. Your accounts payable account tells us when we owe people money. So we increase our accounts payable account to show that we now owe someone that $4,000. Now your worksheet has a balance here where you can add up these numbers going straight across and keep a running total. We're not going to keep a running total in our case. We're going to do them all straight through and then add them at the end. Letter C, we paid creditors on account $2,300. Paid creditors on account for $2,300. Well, first we paid them, so we know that's going to affect our cash. Since we're paying them, we're going to subtract $2,300 from cash. And we're paying our creditors, which means we're paying a bill that we had previously. Accounts payable keeps track of our creditors. We no longer owe them that amount, so we're going to subtract $2,300 from accounts payable. Okay, letter D, received cash from fees earned on insurance commissions, $13,800. Okay, well, we received cash. So since we received cash, we're going to add it here. And our book tells us we received cash from fees earned. So on our paper, we're going to come across our headings to fees earned, and this is where these worksheets get a little confusing, and down to row D, and we're going to add $13,800 there as well. Okay. We received cash for fees earned, and we're increasing our fees earned to show that we've earned that money. Letter E, paid rent on office and equipment for the month, $5,000. Paid rent on office and equipment for the month, $5,000. So we know we paid something, so we're going to subtract it from cash. And if we look across our headings, we have one down here that says rent expense. Okay, so we have $5,000 there as well. Letter F, Paid automobile expense for the month, $1,150, and miscellaneous expense, $300. Now, since we have two separate expenses, we need to keep track of both of them. But since we've paid them both at the same time, we can add those two numbers together for our cash amount. So $1,150 plus $300 gives us $1,450. So under our cash amount, we're going to subtract the $1,450. Go across our headings here. We see that we have an auto expense. Our book tells us our auto expense was $1,150. And we had miscellaneous expense of $300. So even though we added them together to get our cash amount, you need to separate them out into the correct expense accounts. Okay. Letter G, paid office salaries, $2,500. So again, we're paying something, so right here in cash, we're going to subtract the $2,500. We paid office salaries, so if we go across our headings here, we have one that's labeled salary expense. So again, we're going to subtract the $2,500. Letter H, determined that the cost of supplies on hand was $2,700. Therefore, the cost of supplies used was $1,300. Okay, so we have to show that we've used $1,300 worth of supplies. So we're going to come right here to supplies, and we're going to subtract the $1,300 to show that we've used that much supplies. We're going to take this asset of $1,300 in supplies and turn it into an expense. So we're going to come over here to our supplies expense column. Whoops. And we're also going to put in the minus $1,300. I made an error over here and I put this in the balance column, in the balance spot. It should be in the H spot. Letter I, billed insurance companies for sales commissions earned $12,500. Now it says we billed them. It does not say we received any money. Okay, we sent them a bill to say you owe us $12,500. So if we look in our assets section, we haven't received cash, we haven't received supplies, but we do now have an accounts receivable. We have money that needs to come to us from someone else. Okay, so for letter I, we are going to add $12,500 to our accounts receivable account. It's still considered fees earned, so we'll come over here to fees earned and also add it here. Even though we haven't received it, we have earned it. And letter J, we withdrew cash for personal use for $3,900. So withdrew cash, so we're going to subtract that from cash. And we withdrew it for personal use, so if we look at our account titles, we're going to drawing. And we're going to subtract that from drawing as well. Now we've taken care of all of the transactions that were in our textbook, but we need to make sure that our debits and our credits are equal. So what we're going to do is we're going to go through and add up each of these columns and write the totals across the bottom and see if they equal. Okay, so once we total each column, for example, I've totaled the cash column and I got $48,650. Accounts receivable was $12,500, and then supplies was $2,700. So these three are all assets. So when we add those three together, we get $63,850. We total our liabilities column, which was accounts payable, and we get $1,700. So we pull that number down. We're then going to total all of the columns under the owner's equity account, and we get $50,000 minus $39,000. Please notice that I did bring down the plus and minus signs. Plus $26,300 minus 5,000, minus 2,500, minus 1,300, minus 1,150, and minus 300. Take all of these numbers in the owner's equity section from the 50,000 over to the 300, add them and subtract them as needed, and you get 62,150. Add these two together because we have liabilities plus owner's equity, 63,850. So our assets do equal our liabilities plus owner's equity. So now we know that we're done. We've checked it. We've made sure that everything is equal. Okay. At this time, you can return to your PowerPoint for the next set of slides.